You're watching the Dinar Chronicle, bringing you breaking financial developments from around the world. Right now, we're tracking one of the most shocking currency movements in recent memory. The Vietnamese Dong VND has spiked to an unbelievable 6.70 per US dollar, a level never before seen in modern Forex history. This development is unfolding live, and the implications are enormous. This surge has stunned currency markets. For years, the VND has been tightly managed by the State Bank of Vietnam, typically trading in the 23,000 to 25,000 range per USD. To now see a direct valuation of 6.70 signals a complete realignment, possibly a currency reset, a depeg, or a bold monetary shift behind the scenes. The central bank has not yet commented, but liquidity freezes and trading halts are already occurring across major platforms in Asia and Europe. Forex desks from Singapore to Frankfurt are flashing volatility warnings. Hedge funds are repositioning fast, and trading platforms are experiencing overloads due to record volume on VND pairs. This is not just a spike. It's a shock to the global financial system, and traders are scrambling to understand whether this is the result of deep policy changes, massive capital inflows, or something else entirely. Domestically, the Vietnamese economy is feeling the impact immediately. Export-heavy sectors like textiles and manufacturing are under pressure as a stronger dong threatens profit margins. Meanwhile, importers and debt holders are seeing temporary relief. Dollar-denominated debts are now easier to manage, and imported goods are more affordable. Markets across Asia are reacting fast. The Ho Chi Minh Stock Exchange triggered a circuit breaker as blue-chip stocks hit their daily trading limits. Some real estate developers have suspended sales as they reevaluate pricing. Vietnamese expats abroad are rushing to send money home, hoping to capitalize on this massive shift in value. There is growing speculation that this could be the early stage of a full currency reform. Vietnam has been gradually opening its financial system, expanding bond access, aligning with global reporting standards, and signaling a move toward modernization. But no one expected such a dramatic leap overnight. If the VND has indeed revalued as part of a long-term plan, this marks a pivotal turning point in the country's economic future. Globally, institutions like the IMF and US Treasury are likely monitoring the situation. Any sudden currency appreciation, especially from an emerging market, raises questions about trade balance, regional competitiveness, and possible manipulation. China, which competes with Vietnam for export dominance, will undoubtedly be watching with concern. At the retail level, banks in Vietnam have started limiting large currency conversions. Social media is buzzing with speculation, and many trading apps are reporting downtime. It's clear that both domestic and international players were caught off guard, and right now, no one has a clear picture of what's driving this event. The next 24 to 48 hours are critical. If Vietnam's central bank steps in with policy announcements, like interest rate shifts, FX interventions, or capital flow controls, we may see the situation stabilize. But if this is the beginning of a broader monetary reform, the VND may have entered a new phase entirely, with global investors forced to rethink their positions in the region. For now, one thing is clear. The dong hitting 6.70 is not business as usual. Whether this is a controlled revaluation or an uncontrolled market event, it has already changed the dynamics of Southeast Asian finance and potentially set the stage for other emerging economies to follow. This is a developing story, and the Dinar Chronicle will continue to bring you the latest updates as they unfold. Disclaimer: this report is based on a simulated financial scenario for discussion purposes only. As of now, there is no confirmed evidence that the Vietnamese Dong has officially reached 6.70 per US dollar. This is not financial advice or verified news. Always do your own research.